Hey guys, this is Karthikeya Kantwal from Apex FinServe, and we're back with a couple of charts for tomorrow's trading session along with the daily watch list. But before we begin, about the trades that we had discussed yesterday, well, out of those five, nothing was triggered, and we had no currencies and commodities watch list for today, simply because there was nothing lucrative enough for us to share with you guys. And whatever we did was a bit on the more aggressive or the riskier side, which, well, we weren't really comfortable asking you guys to do the same because we were comfortable with the risk that we had, built up in those positions. We didn't really know whether you guys would be, so we didn't bother sharing that. Now, starting with the trades for tomorrow's trading session. So, starting with the first one, now on SRT Transfin, keeping in mind the recent structure, if you consider the significant swing, it has completed a lower low and then a lower high, and then, well, it should go down to make the lower low. So, we'll be taking confirmation of a mini or the smaller swing break if you consider small structures as well. If you consider this to be a higher high low, we'll be considering a break of this point, so we'll be going short under 675 with the stop loss at 685. Now this is again sell under 675, not at 675. So this is one place where you'd like to use the SLM order if available. Moving on to the second one that we have, Apollo Hospital. Now Apollo Hospital, I told you guys clear high low, high low structure was being made. Well, today that was being refused, even despite the positive market perspective or the positive general market. It couldn't really go up anywhere. So we'll be taking a short position at the recent swing high at 1510 with the stop loss going at 1525 and the ideal targets being 1% as usual. Moving on to the third script that we have, Just Dial. Well, Just Dial, we tried going a bit aggressive today and we missed our entry at we were supposed to go long at 370 and it made a low of 370.3 or 370.35. So the bracket order was left unfilled by just that little bit. Otherwise this would have triggered today and we would have had a green day for the watch list. Well, no trades is still green because you keep your money, but still. So tomorrow we'll be going a bit on the safer side with Just Dial, simply because it seems to go further into range contraction and it might be preparing for a break on either side. So we'll be taking a conservative but confirmed entry of a short position at 380 with the stop loss going at 385 and the ideal targets at 1%. Coming on to the next script that we have, PL. Now this is where we'll be going slightly aggressive. Now we'll be entering a long position at the slightest retracement, or this is roughly about 30 to 40% retracement of the move that it had witnessed today. So we'll be taking a long position at 1520 and the stop loss at 1500. Now some of you might say that the move in pale was because of the news, the stake sale. Well, but the news has been factored in. As we can see, the move has happened, so we might as well just follow the technicals instead of worrying about further news that is not even out yet. So as I said, we'll be going long at 1520, a bit aggressive, but that's fine. We are balancing out on the conservative entries in other charts with the stop loss going at 1500, targets at 1%. The final equity trade that we have is IndusInd Bank. Now IndusInd Bank, it is pretty much the same as Apollo Hospitals. A high low was being made. It was being made, but today it was rejected. So we'll be taking a short position when a smaller swing low breaks. So we'll be going short only under 520, top loss being at 528, targets being 1%. Now this is again sell under 520, so preferably as usual SLM order type instead of the standard bracket order affair. So moving on to the indices that we have, well, Nifty, clearly it has been going up. It has been going up, but the way it has been going up is not really something that is to my personal taste, because the move or most of the move is factored by the gap and then it goes sideways. So it's not really something that I recommend trading. So I told you guys yesterday, if it opens in a positive manner, I would like to go longs or initiate new longs at a pullback. But look at the gap that happened. It was roughly 80-90 points gap and it didn't make sense to take aggressive entries thereafter. Now let's see what happens tomorrow. Well, there is an interesting thing that has happened in the option chain for Nifty in particular. Well, there's a huge imbalance between the writers on both sides, the calls and the puts. Now when we look at the call side for resistances, of course, we have our immediate resistance at 11,300 with 380,000 added contracts. Now that is a healthy percentage of the total 2.1 million contracts. But I cannot say that, of course, almost all the contracts were added today. However, if we look at the support side for the put writers at 11,100, the total contracts are 2.2 million, out of which 2 million contracts have been added today. So the put writers are showing, or shoving in all their strength while writing the puts. They are being absolutely crazily aggressive while writing puts, whereas the call writers are, moderately writing down. They are not seeming that sure-footed about their own positions. So we'll see how that goes. Now that this same thing is observed in significant levels of resistances too. We have significant resistance at 11,500 with 730,000 added contracts, which is again a healthy percentage, roughly 30% of the 2.5 million total open interest at that particular strike. When we compare that with the significant support level at 11,000, that is 3.1 million total open contracts, and out of which almost 1.9 million, or if you round it off, well, probably 2 million were added today. So it is a very hefty increase in one single trading session. So the put writers are being very, very aggressive. They seem absolutely sure-footed that the market is not going anywhere but up. Let's see how that goes. When we compare that to the option buyer stance, so well, put writers have been aggressively writing, whereas the option buyers have been aggressively buying puts. When we check the PCR volume for Nifty, it comes out to be at 1.04, which is highly bearish. It's not really sustainable this way, not for the writers either, or for the buyers. Both of them are heavily on the opposite side, so it's pretty much a brutal war between the writers and the buyers. So let's see how that pans out in tomorrow's trading session. For me personally, well, I would keep in mind these resistances and support levels from the option chain. I personally do not like to follow the dynamic option chain shifts in the live market because the charts are more than sufficient. So what I'll do is I'll keep in mind these four strikes as my levels of support and resistance. Use that in confluence with my chart, which I showed you guys earlier, and take trades accordingly wherever there's confluence or confirmation of price action. We'll see how that goes. Now coming to the next index, we have Bank Nifty. Now Bank Nifty as well, I told you guys tomorrow I would wait for the price action near 22,500 levels. Again, stupid gap up, roughly 300 points. Didn't give a pullback, didn't give a satisfactory entry. I did take a long trade near 600. I booked around 100 points, nothing major. The trade wasn't as good, so I didn't share it in the group because the stop loss was pretty wide. I kept it somewhere in the middle of the gap, so that was almost a 1:1 or even slightly inverse risk reward kind of trade. So I didn't find it worthy to share with you guys. Now for tomorrow, I would preferably observe the price action near the zone at 22,800. If that is being crossed, then well, 23,000 is the next place. If that is being respected as a supply zone, then we might as well see the gap fill up to 22,500. Now when we go to the Bank Nifty option chain, the imbalance between the call writers and the put writers, it's not really that much. Both of them are putting in moderate quantities. We have your immediate resistance at 22,800 with 100,000 added contracts, your significant resistance at 23,000 with roughly 89,000 added contracts and 800,000 total open interest. For the support side of things, you have 22,700 with 158,000 added contracts and significant support at 22,500 with 315,000 added contracts. Now this is moderate. This is a normal level of action on both the sides. There's no problem as such. The PCR of volume for Bank Nifty, when we check that, so that comes out to be about 0.85, which happens to be mildly bearish, not aggressively and definitely not as bearish as the PCR for Nifty. So Bank Nifty is pretty much stable right now. There's not much action going in either on the charts or the option chain. What I'm particularly going to be looking out for, or what I'm excited for personally, is how Nifty pans out in tomorrow's trading session. Simply because the option chain for Nifty is one of the most interesting option chains that I have seen in recent times. So let's see how that goes. Coming to the other charts that we have, well, silver. Now you might have wondered why there was no trade posted on the watch list or any level of any kind shared with you guys today on silver. Well, silver, if you look at the chart, it's simply not tradable. The risk that you have while initiating any position is simply too large. The gap up opening, well, that had one big chance to fill the gap itself. Now if you were an aggressive trader, you might have taken longs once it broke out of the zone at 55,500 or something like that, but again the risk was simply too large. I don't think it was fair enough to share it with you guys. Why take unnecessary risk? Now, crude again, crude. I have been telling you guys. I am telling you guys again and again. 3080. Watch out for this level. It broke out of this level fairly strongly. It then formed a flag pattern. It went up again. Well, it was a very easily tradable thing, guys. We forgot sharing crude with you guys. In all honesty, so we missed that. We're sorry, but I hope you guys caught this trade. It was very easily tradable. If you have watched the previous videos, you might remember me asking you to watch out specifically for break of 3080 level. It happened and we had a very good move thereafter. Let's see what we get for tomorrow. We'll share it with you guys tomorrow for sure. Coming to USD INR. Well, USD INR, the opening was slightly gap down. It tried to reclaim the zone. It failed and then fell flat on its face. Not something that a conservative trader would have caught, but if you were performing simple structure analysis of the market, you might have noticed that this was nothing but a retracement of the previous lower low swing leg, as a result of which you could have taken a short position once this zone was broken again. So again, easily tradable move here as well. Moving next to GBP INR. Well, GBP INR, these same zones, they have been on the chart for a couple of days, and these zones have been acting just as they're supposed to. The opening was gap up. Now I told you guys I do not consider a gap up opening to be the break of a zone or a level or anything as such. But if you observe the chart, it went under the zone, tried to close the gap, but then in the live market it crossed the zone or it breached the zone. So that is a zone break, beyond which you could have taken a long position once that candle's high was broken, or using any other confirmation parameter that you see fit. So again, this was a very tradable move. You could have caught well in excess of I think for 500-600 pips easily without much worries. So all things considered, if you are an active trader, you must have had a very good trading session today. Even if Nifty was pretty much sideways, you should have had a good trading session today. Now these are all the charts that we had to discuss with you guys. If you want all of these charts along with the option chain analysis and the equity watch list, check out the Telegram channel @ApexFinServe. We upload those without fail, unlike sometimes in commodities where if the risk is too high, we will not share it with you guys. But the equity trades, the index analysis, all of it is uploaded every day before 9 a.m. on the Telegram channel, the link of which is there in the description below. But if you want to search it, it's @ApexFinServe, so you can find us there. And well, if you, as always, if you like the content that we have been posting, do like, share, subscribe. Well, it brings a smile onto our face for sure. I hope you guys have a good green trading session tomorrow. Let's see how it goes. As I said, I am excited for Nifty, so I'll be keeping an eye on it specifically throughout the trading session tomorrow. Thank you so much for watching. Have a good night. Bye.